following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the March 13th terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs, the beliefs that I refer to as the 9 rules of the universe. You know, the universe says to us on a consistent and ongoing basis, if you don't move, I won't move. Or said another way, if you sow, you can reap. But we first must sow. Number 2, the universe says, hey, unless you change what you are, you always have what you've got. The universe says the way you do anything is the way you do everything. The universe says leaders are readers. So the question is, what was the last book you read, and when did you last read a book? It isn't what the books cost. It's what it will cost you if you don't read it. The universe says, don't say if I could, I would. Say if I can, I will. The universe says wherever you are, be there. On your way to work this morning, concentrate on work, not on home. And then on the way home from work tonight, concentrate on home. On the way home, not on work. The universe says don't set your goals too low. If you don't need much, you won't become much. The universe says happiness is not something you postpone for the future. It's something you design for the present. And finally, the universe says time is our most valuable asset. Yet we tend to waste it, kill it, and spend it rather than invest it. Folks, respect the rules of the universe, and they will respect you. Let's go check out the markets here. Right now, the Dow is up 32 points. It's trading out at 16,372. The S&P up 3 points, trading out at 1871. NASDAQ up 8 points, trading out at 4331. Russell 2000, slightly green out here. Something to think about. It's up 84 cents, trading out at 1192. The NASDAQ 100 up 8 points. It's trading at 37.15. New York Stock Exchange up 11 points out here. We've got gold back 260. Silver off 12 pennies out here. Light sweet crude is flat. Quick peek here at net advancing issues. Still pretty tepid out here. 377, not enough to turn the oscillator back above the zero line. So in the New York Stock Exchange, the bulls do not have the ball. It is the ball is in possession of the Bears. We're going to see whether or not they can do anything with it. Our call number is 877-927-6648. Let's begin the day. Let's take a look at the S&P 500 out here. If we take a look at yesterday's candle, sure looks like a hammer, doesn't it? But it's not. That's a head fake out there. Very much the look of a hammer candle, but just not enough of a decline out here inside of coming off of the highs in order for that to act as a hammer candle. A lot of message, though, behind that, because you just simply see the intercession low, and you can see that the bulls were able to move in, rush in, and push price up. Of course, we know that price, in essence, here was going back against this breakout session, this wide-ranging bar from March the 4th out there. That's just that's a key critical level inside of the S&P to the downside out here. So not a hammer. Don't treat the yesterday's candle as a hammer out here in the marketplace. What are we doing right now? Right now, you can see the S&P is traveling inside of that swing point from March the 7th. If it closes today above 1870.56, that will say it wants to go test the high of 1883 out there. That's what's going on inside of the S&P. Let's take a look at the New York Stock Exchange here. I did not update my charts here for the price oscillators and everything last night, but the New York Stock Exchange looking pretty weak out here. If we take a look at retracements, we just simply come from the retracement high of March the 7th down to the low out here. That was yesterday. That low that we're looking at, 10,344. It is above the 0.382 retracement. That says 10,471 would be next on its hit list out here. I see we've got a caller all the way from Costa Rica. That's K. Rico. K. Rico, how you doing, my friend?
Good morning, Steve. I'm doing fine, and you sound good.
I am good, healthy, and all of the above. And that, as you know, health, that's what it's all about, isn't it?
It's all about it, man. You got it, but you know what we're talking about.
I do. And so you want to check in on the health of ANV is the ticker symbol. Tell us what you're doing, what you're looking at, and tell us how things are in Costa Rica.
First, I'm going to study this stock, all of its business summaries and profile and dollars and cents, and I'm going to look at this thing thoroughly because the funny thing that I do have a history of some research on this stock, when this little bad boy gets going, it really gets going. But it's come down from some high, $35, $40, I believe. I'm going by my memory from 2 days ago.
Yeah, it has.
Back in the good days, back when everybody was high flying. But this junior miner has the potential to explode to the upside if really this is a temporary new bull market right now. I mean, there seems to be no pullback in gold, Steve. You know that as well as anybody, and it's surprising.
Absolutely.
I thought we were going back down, which I told you before, and I think I'm going to have to eat crow, and I'm wrong.
Hey, it's never over till it's over. But in the case of Allied Nevada, ANV is the ticker symbol. You are right. It's dealing with like obviously it's taken a big ride to the downside. And if you just simply go recently from a swing point high from October of 2012, so not really that long ago, it has gone from $40. It's trading at $6 right now. But nonetheless, the trend in this stock has definitely changed. And even though it's up against some stiff resistance here, and that's being the resistance of the selling that took place on August the 6th, as that 15 million shares to the downside. What this did have, moving into that actual candle session, as a sign of strength, coming off of the bottom, not right at the bottom, but this did have, as you pointed out, I mean, when this thing can start moving, it does start moving. And so this did have 17 million shares to the upside on January 14th. I consider that to be extremely bullish for this, a nice bullish sign. And it had recently, another sign of strength as was taking on that area. So instead of volume decreasing as was coming into that gap, it had 13 million shares out there. So somebody was saying, hey, I don't care about the left side of that chart out there. And in fact, it was on that trading session that it actually went ahead and confirmed, an A to B equals CD to the upside, a small one that says this wanted 637. I'd have to say more like 691, and I'd really have to go all the way to the 750 level out here. So the change in trend has certainly taken place inside of gold, no question about that, and inside the mining equities out here. And I've been in them a couple times, and now I'm questioning whether or not I should have just stayed in totally for the long haul, because this one isn't pulling back. So this you'd like to see gold pull back and then jump in and watch how this one trades and then jump all over this one. I would think.
Yeah, period.
So now on the weekly chart, if we just take a look at a weekly chart out here, it shows that in the case of the weekly chart, you'd sure like to see it get above, because it's really been trading sideways. Now, that's a plus, because it also says that this little consolidation in the consolidation candle it's trading in, K-Rico, is that as I see it, is the August 9th candle session out here, which is $6.17, low of about $3.50. So this has got about $3 break above $6, nine-ish or so at least, and then I think more. I mean, it's just, these mining stocks are looking PDN, pretty darn nice.
Yeah, the junior miners offer the best, return on investment possibly. But then again, where's the pullback already? This is, I don't know what to believe. You hear about this is strong underpinnings because of the Ukraine mess. It's always some excuse or some nonsense, and it's not nonsense. That's the wrong word. I apologize. That's Ukraine's a mess.
No. Yeah,
it's not nonsense.
Look, a lot of factors are going to affect a chart. It just depends. If you are so those are fundamental aspects. If you're a technical trader, then you just simply trade the patterns and you disregard the news because it's built into the stock chart at some point in time. Usually it's built in before the news gets released out there. There are some warning signs, but more of the warning signs. Let me see if I updated I don't know if I updated the gold chart out here. Like in the case of silver, that's light sweet crude. Let me see here. Yeah, so I did update in the case. So when you take a look at silver, what's so interesting about the metals is that silver really hasn't participated. Not like the gold miners, not like gold itself, and silver continues to run into resistance out here. And commercial traders, which I consider to be the smart money out here, commercial traders have moved off of they've moved to a higher net short position as a percentage of their open interest, including last week. And that's typically not the type of, and we're talking about getting back to the levels, they haven't been back at this level since February in 2013. And that's not the typical behavior that you would see out here. I have to go over and see if I did it if I updated the gold chart. I know I took a look at light sweet crude, gold, and silver. Yeah, it looks like I updated gold as well. And in gold, commercials have moved more towards their net short position. So that, too, with regard to the so-called smart money, is a little perplexing out there. And I just throw that in as another piece of information because it's really, when I can tell you that when gold was making the lows out here, both back in June of 2013 as well as the lows back in December, you had the commercials getting to their smallest, least they're always short, both in silver and in gold out there, selling forward positions, whatever it might be. But they've moved well off of that position out here. And for something that's making a turn like this, you gotta, why is it? Why is it that the smart money is doing that? And I don't know.
Be nice to be able to pick their brain, huh?
Yeah, well, you can pick them every Friday afternoon at 3:30 when the CFTC releases the numbers. But then you've got to go ahead and you've got to make your own, decision. Now, look, the one thing I do know is that these large commercials, they build positions over a long period of time. They're like the Titanic. Now I don't know the Titanic. Maybe that's not a good example because that only took a couple hours to sink out there. So like a boat that takes a little bit longer to sink. Hey, speaking of conspiracy theories, what do you think's going on in Malaysia?
Well, as a matter of fact, I was talking to a gentleman late last night, and there's some very serious concern about this could be more than a simple, I don't mean it that way, simple crash. It's not simple.
Yeah.
There could be some serious monkey business going on where this plane is not only stolen and hijacked, it's going to be refitted for something very serious.
Interesting. Hey, K. Rico, always great to hear from you. Thanks so much for sharing, and have a great day.
Thank you.
Absolutely. Well, you bet. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Russell 2000 just turned red during that commercial break here. The Dow is up 27 points. K-Rico bringing up some good points out there and taking a look at Allied Nevada Corp. ANV is the ticker symbol there. If we take a look at other mining equities here, the largest move of the, 50 or so, 40 or so that I follow out here, Cameco Corp. CCJ is the ticker symbol. It's up nearly 6% here this morning. I don't know if there's any news behind it out here. Let's just take a look at the news of what the stock chart itself is doing. So if we take a look at it, it's taking out a swing point. Now, this thing has had several nice signs of strength here recently. Big wide-ranging bar back on February 25th out there with volume behind the move, 7 million shares out there, moving into a swing point that only had volume of 3 million shares. You like to see that. It tells you that not only are you likely going to test the top, but you're likely going to go ahead and take it out. That's exactly what it did on the following session as it gapped up on February 26th. And guess what? It gapped up with even more volume than the prior trading session. So far, we've been trading for about an hour's time. It's done 1.7 million shares, so you got another nice day. Now, it's also taking out a swing point here with volume. That swing point having about 3.9, 3.2 million shares out there. So assuming that the volume here maintains itself, you've got a nice I think you got a confirmed A to B equals CD to the upside anyways. Let's take a look at it. Again, CCJ is the ticker symbol out here. The low being 1727. And yeah, it's a uranium type of company producer out here. Take a look at the January 22nd high, that being the 2319 level. And your C point is the low here from February the 10th. Now you can see it's hit the 1-to-1 already today. The confirmation of that A to B equals CD was the taking out of the January 22nd swing point high, doing it with volume. But take a look at this move here, the powerful move off of this C to D leg. You know, coming off the bottom here, not a bad move itself, but the stronger move coming off of the retracement. High volume low. Looks like that just shook out some of the long positions out there, and then it was off to the races. So where's CCJ headed to? Heck, first of all, if it's a change in total change in trend, which looks like many of these mining stocks are, you know, the buy may have been in. Maybe we don't see much of a pullback out here. I don't know. What I do know is that CCJ, if we stay on this stock chart, 27.26 is its next target, and you cannot discount $29.35. Yeah, it's in right now a little bit of an overbought condition, but bullish stocks will stay in longer overbought conditions out here. Now, I could clearly see I was in this stock chart at one point. I don't recall which bottom I played off of it, but I gave you a target out here. I gave myself a target out here when we took a look at the weekly chart as being the February 24th swing point. Now, that had 16 million shares out there, and it looks like it's approaching that with more volume. Yeah, most certainly it is. It moved into that level back here on February 28th out there. I did it with 23 million shares. Last week, 15 million shares. Still not too bad as it takes on a 16 million share week out here. So that is the swing point. Maybe it takes a bit of a rest once it gets up to that level. However, you can see I've got the second target already labeled out here inside of CCJ, and that's going to be at a little high volume gap down. That's probably where it runs it to. It's the largest area of resistance, and that low, 2808, and the high of that is 3287. What else do we have that's moving? You got Great Panther Silver. It's up 4 pennies, which is about 3.5%. So let's not go there. Let's take a look at something. Take a look at something that's got a little bit of oomph behind it out here. What would that be? Looks like. Let's take a look at, I don't know, Pan American Silver. That's up a couple of percent. PAAS is the ticker symbol. That is up 31 cents here this morning. PAAS. Let's go see what it is doing. So you've got this one up. It's a silver equity here. Silver is, kind of flat, running into resistance out here. But Pan American Silver is saying, so what? And let's go see what it's doing volume-wise out here. So give me a moment. We'll pull this stock. So, beautiful-looking stock chart for sure. This here, man, what a nice trend. Take a look at the trend line on this, or the rising price channel inside of this equity. Probably we'd go ahead and use right about there as the price channel out here along the tops. I don't know. I'm not going to spend too much time worrying about the top of it here right now, but there's your nice little rising price channel. So far today, it's up with about 564,000 shares here. This thing had gapped down a little bit with about 3 million shares on February 25th, so we'll see if it runs into any resistance there. But its next A to B equals CD, the next swing point, which here's what we're really watching. February 21st candle out here. February 21st, 3.3 million shares. If it closes inside 1481, pass. Pan American Silver ought to at least test the high at 1563. 877-927-6648. Dow is up 28. S&P up 2.5. Be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 25 points right now. S&P's up 2. Composite is up 1. Russell 2000 back about 70 cents. So let's try to take a look at the stock charts here that we look at that truly do impact the markets. Our Euro Japanese Yen chart out here. Yesterday we had a little doji candle. Not a lot of relevance, only from the standpoint, except that it did not follow through to the downside after that little bearish engulfing candle that formed at the top here at that 0.786 Gartley sell pattern out here. So today it closed below that, a close below, a lower close out here is just additional follow through on this pattern. It says the Euro Japanese Yen should pull back to about the 140.89 level and then really then to the 139.10 level. If in fact that's the pattern that we see play out here, you'll see the markets turn red and move lower. And the real key here is going to be what happens from the dipsters out here. So Tuesday's session, and we like to call that, at least lately, right? The market likes to call it Turnaround Tuesday. And Turnaround Tuesday, so to speak, did turn around in the morning and sold off the rest of the afternoon out there. And that was kind of interesting. That was the first that was not the first signal, but on turnaround Tuesdays, it was a signal of a change in trend out here. Because if you go back and take a look at, over the course of the last several months out here, you'll see Tuesdays happen to be turnaround Tuesday up sessions, and certainly during the last several weeks out here, last month or so, last 6 weeks. So that did not happen. And the question that we need to pose to ourselves, what happens to any of the rallies out here? So we saw a rally this morning, a rally failure has to say, okay, there's some change in trend, additional signals, really confirming what it is that we would be looking at here inside of this currency pair, the euro, Japanese yen. If you'd like to understand the currency pairs, how you take a look at channel lines and trend lines and A to B equals CD patterns. And if you didn't catch the first hour of the show, please go check out the archive on Channel 9 today. Great educational lesson there during the first two segments of that show. So that's inside this. Let's go take a look see what's going on inside the VIX index here. It's that 50-day exponential moving average that is key for us. Oops, let me put a different chart up on the screen here. Now the VIX is below the 50-day exponential moving average. Okay, that says liquidity in the marketplace. That means more bullish than bearish out here. What's the number, though? By the end of the trading session, right now you've got the VIX trading at 1439. If it closes above 1466, and here's the problem. Yesterday's close, 1462. The prior day's close, 1471. The prior day's close, 1420, that was back, I'm sorry. So the last 2 days we've been closing right on the 50-day exponential moving average out here, so kind of one of those draws out there with regard to the volatility index. Euro, Japanese yen, right now the message is, hey, I've got a sell pattern in place, and since the stock market follows that pattern out there, that says you've got to be paying attention to that. If we take a look at, so that's two. If we take a look at, what else we want to take a look at? Let's go take a look at the 30-minute chart here on the ES Mini, see what we have going on here. I believe the number is, I got it written down somewhere, probably on 1866.25. You're at 1869 right now. It starts moving below 1866.25 out there, and that all of a sudden gives the ball back to the Bears. Not actually, the Bears still have the ball, so that would be a misstatement on my part out here. And what I mean by that is the New York Stock Exchange is the one that gave us the signal with its price and volume oscillators moving below zero. The summation index finally turning down out there. The key level here inside of the New York Stock Exchange is going to be that 10,387.17 out here. It is trading above that. That happens to be the 2007 highs out here. And this is important both on a weekly and a monthly and a daily chart out here because it's like a 6,000-point consolidation. So close above that level here on a consistent basis is a confirmed breakout because we've seen price move above it, then move back below it. But right now, the key is, I believe today, let me see if I can punch it up, in order for the bulls to actually take back control of the New York Stock Exchange, so the wider swath of the market, you would need to see 1,595 net advancing issues. It's been a long time, really, since we've been talking about net advancing issues inside of the market. Net advancing issues or net declining issues here so far today. You've got, you actually have net advancing issues of 118. That's not going to do the job out there. So you've got the market. New York Stock Exchange still has its bearish signals out there. So those are really three key levels to be focused on and paying attention to that become pretty easy for you to identify at the end of the trading session. If we do go take a look at the ETF structures out here, let's take a look at the daily charts there, see what we have going on. You've got let's start off here with the Qs. What are the Qs doing? So the Qs here gap up this morning. They opened up at a price point of 90.90. It's where they open. They're trading right now at 90.47. The key is going to be if the Qs can make their way back down to this swing point low from last Tuesday, March the 3rd. The high of that session, 89.91. Yesterday was a total reversal, was a total rejection of that swing point. It closed the gap. It came back. That you consider. You see, in the case of the Qs, what's interesting and what's so unique and dynamic about the QQQ ETF is that we have this gap up here on March the 4th. Now, normally a gap up is a form of a sign of strength. This one had the wide price spread. Now, if you just looked at that candle, you wouldn't notice it as wide price spread. Always make sure that you're filling in the gap here when you're taking a look at candles. So it had wide price spread. Gaps are as strong as you can get out there, and gaps are your friends because they mark natural areas of support and resistance out here. So don't be afraid of gaps. And with stocks moving up, don't say, hey, just because we have a gap, that means that it's going to immediately go back down to that level. That, to me, that's a wrong interpretation. Gaps, especially if they are followed with accelerating volume, have meaning of bullish breakouts. Well, or bearish breakdowns. Depends on the direction that something is moving in. Well, inside the Qs, you did not have that. You only had the wide price spread. But volume on that trading session was 33 million shares. That was after making a low with 38 million shares. In this case here, the Qs make highs with light volume. And this has been quite a topping pattern that could be, we could take a look at out here, because you had the trading session of March 10th out here. The trading session of March 10th. 18 million shares? Are you kidding me? I mean, that's up at the highs. So that's their pattern out here, and until the high here of March 6th gets taken out, key reversal session, having these light volume candles out here, I'd have to say that the message of the Qs truly does go to the bears. Now, yesterday you came back into this little breakout area, but it really, was it really a breakout? Not the kind that you're going to find in any kind of book out here. It certainly was a gap up, and that level was rejected. So the key is going to be March the 3rd. You see a move below that March the 3rd level, 88.87, and then that sets up what the Qs are signaling is a pullback. And the pullback here would take it down to, I'd have to say, 86.64, just simply your 0.618 retracement out there. So that's inside of the Qs ETF. Now, that's totally different than the IWM, isn't it? Because the IWM, on the other hand, it is textbook. It's textbook from the standpoint that it broke out with accelerating volume. That is a breakout. So here is where we've got the battle between bulls and bears out here. And as we take a look at that battle, we had a move down back last Tuesday, March the 3rd, but the volume there was only 50 million shares moving back. And then on the following trading session, 112 million shares. Twice the volume, more than twice the volume to the upside here. But the high's not been able to have been taken out. And in fact, what we've seen here, what was interesting about yesterday's session is that it pulled back and it did test the breakout area. Now, your typical test that you like to see is a test of the low. It didn't do it. It didn't make it all the way down there. It did test the high. It says that is now it's our first level of a test of support. So today, tomorrow, what have you, the real key is going to be what happens if price gets down to 117.26. You're at 117.97 as we speak right now. Does price come back to 117.26? Does it do it with less than 50 million shares? And does it reject that? Does it close above that? When you get three tests of that area, that all of a sudden cements a pretty darn good support area. And that's what we want to watch for inside of the IWM. Volume today, about 8.8 million shares, a little over an hour of trading. It has not pulled back to that area. But the key is going to be if you start seeing volume move into the 50 million plus level and get into the 117.26 to 115.58 as volume moves into that, as it's moving into a swing point, just like we took a look at some of the stocks out there. We took a look at Allied Nevada, ANV with K-Rico. We took a look at PAAS. Pan American Silver. We watched how the signals on a weekly chart and a daily chart, when you move into a swing point with volume, that tells you that not only are you typically going to go ahead and test in this case here, as the stock is moving up the highs, in this case, it would be the stock moving down to the lows. It tells you that when you're getting ready to bust through that area. So we'll be paying attention to the IWM to see if all of a sudden it starts to follow along with the message that's inside of the Qs out here. If we take a look at the SPY, the SPY, right now it's trading out at 187.15. It did not test the... Now, here's what we want to watch for inside of the SPY. Let's assume that today is just nothing more than kind of a sideways trading area out here. If that is the case, what the SPYs could do is they could still gap down tomorrow and create an island out here. At an island at all-time highs. They have this island because of that session on March the 3rd. So the high of that session is 185. 185.45. The low of the prior session of March 4th is 186.75. Yesterday's pullback did not complete the gap, did not fill the gap out here. And so, well, don't know how this is going to play out. But the SPYs here still have that opportunity to possibly do that. We'll want to be paying close attention to that. Doesn't have to have a gap down to form an island. Well, it has to have a gap down to form an island. Let's just say it doesn't have to form an island reversal in order for this to get bearish. What you would just need to see is moving back into the March 3rd area with more than 167 million shares. And yesterday's pullback, only 100 million shares, so it was not ready. Excuse me. That was the strategic pause of a gulp of water out there as I had one of those little dust balls, fur balls, fly in as I was taking a deep breath in. That is you see the type of stuff that we as commentators have to put in. We got to worry about our breathing patterns and picking out a piece of dust in the air out here. That's the type of wars that we have to fight. In any event, so that's what's going on inside of the SPYs here right now. Volume today so far 21 million shares. So the volume number is 167 million shares, and that is that's the March 3rd candle. Let's go check out the diamonds. Let's go ahead and round this out as we speak right now. The diamonds here trading out at 163.17. They too could actually still form a excuse me, a little island reversal. So far today, moving back, pulling back with 1.2 million shares. Yesterday, pulled back with 5.2 million shares out there. Putting, I'm sorry here, folks, multitasking, as you could probably guess. Excuse me, I got to take another swig of water. Sorry about that. Yes, I do see below the 1865 level. That was part of the multitasking there, Jay. In any event here, the diamonds here, the key number to be watching will be what happens if price pulls back into that March 3rd level. And that high is 162.19, the low 160.49, only 9 million shares there. Today we've done 1.2 million shares, so volume would really need to pick up to the downside out here. Well, this could be a real struggle here for 2 minutes. My apologies. It's got to be one heck of a fur ball that I just took in. In any event, let's go take a look at some of the sectors with inside the S&P 500. Wow. Don't think I've ever had to fight off something like that. Let's take a look at the energy sector, the XLE out here, see what it is doing. So you got down with 2.7, see 11th out here. Really on February 24th, moved up with 18 million shares. In this case here, to take out the swing point high, 88.48. Swing point was 88.54. So it moved into a swing point, stopped just before it, and did it with volume and wasn't able to take it out, which is really kind of interesting out here. You would have expected at least the high of that session from February 24th to be tested, but it has not. So there is some bearishness, definitely some bearishness up here in the, when I say up here, in the price range of about 88.33 or so, a little bit more than that, and had that big key reversal session out here. So we'll keep an eye on the energy sector as it is showing some sure weakness. Let's take a look at the financial sector out here, the XLF. Let's see if we can find that, see what it is doing. It's trading right now at 22.15 out here. This did not. Hey, there we go. A break, and I can really swig some water. My apologies, folks, for that. Right now, you've got the Dow is trading off 25, S&P down 3, Composite off 14. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow off 21 points. S&P down 2 right now. And speaking of changes in trend out here, if we take a look at yesterday's action inside of the Russell 2000, inside the 120-minute futures contract, it was making one of our favorite patterns here. That was the price relative strength divergent pattern. It was moving lower with less relative strength out there. That was suggesting that we were going to see some kind of a bounce, and a bounce we got. Nice big bearish and bullish and engulfing candle that took place. Let me get my crosshair out here. That took place on the trading session of 12 noon. It's a 120-minute chart that we are looking at, and then you got some nice follow through. Now we're starting to see the bears take control. You can see using the Rhodes momentum indicator signals out here. We've now moved into sell zone territory. Of course, this 120-minute session does not end for another hour and 5 minutes out here. Right now, you've got the Russell 2000 giving sell signals. If we go take a look at the ES Mini, let's go take a look at the March contract. This rolls over here to the June contract, so we'll be looking at the M contract beginning tonight, beginning tomorrow morning out here. You can see that the this did not have a price relative strength divergent pattern out here. Began to form at the 8 a.m. session, but it went ahead and moved lower with more relative weakness. Really, that's the way that we should be taking a look at it out here, and that was inside of the ES Mini. If we take a look at the NASDAQ on the 120-minute chart out here, again, looking at the March contract right now, it's trading, well, as soon as my chart posts up on the screen here, I grabbed the, what did I grab? I grabbed natural gas. I grabbed the wrong. So natural gas, as long as we're here, here's the natural gas contract here, the 120-minute chart out here. And this is the wrong contract anyways. Sorry about that. So I don't want to grab that. Let's not take a look at it. Let me get back to the NQ out here. There we go, the NQ. NGNQ. What are my eyes? You know, I'm not wearing my glasses out here. So we could take a look at a nice big old bearish engulfing candle here that is setting up. We're talking about now taking back, in essence, the last, coming all the way back to 2 o'clock yesterday afternoon in just really 1 2-hour session. Now, this 2-hour session, again, does not end until 12 noon out here, so it could be even more than that. So we are seeing the selling pressure clearly. Is it a total change in trend here yet inside the NASDAQ futures? No, we're starting to get into that sell zone. If we take a look at what the NASDAQ futures were able to do, and we're going to be paying attention to out here, they were able to, on that Gartley buy that set up, that 0.786 Gartley buy pattern that set up yesterday at 10 a.m., they were able to make the 0.786 retracement out here. They made that. They're now pulling back. What it has done is come down to the 0.382 retracement level. It's doing it with a wide-ranging bar. 36.99 is the number. Again, this does not end until 12 noon. However, in the 0.382 with the wide-ranging bar, just like you had a wide-ranging bar to the upside here that took place yesterday at, what time was that? That was at 12 noon. That told you that it wanted higher price. If we see a similar type of wide-ranging bar, maybe even get all the way down into the 36.84 range, that would be your 0.618 retracement. That would be a big sign of that it's going to go ahead and come all the way back to the lows out here, at least from yesterday, and test its 0.786 Gartley buy pattern. Now, what do we know about those 0.786 patterns? When they fail, they turn into butterflies. That would be a problem inside the NASDAQ futures because, number one, you've got a 96-point consolidation range, and that means that if the 0.786 Gartley buy pattern here fails, because it worked, because it was successful out here, not only will you see a price back to the bottom of the consolidation, that price point being about 36.37 out here, but you're likely to see this turn into a butterfly pattern. That says the consolidation gets broken. That says that the NASDAQ futures would trade all the way down to 35.44. Folks, it is Terrific Tuesday. Stay tuned. Our man Basil Chapman is up next. Have a terrific Thursday. Don't know which day I said it was. Have a great Thursday. Look forward to seeing you soon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.